Grüß Gott, dear crypto friends. Grüß Gott, that's how we say in Bavaria. So welcome to this new video, and today we are going to talk about interest rate hikes, how this can affect the dollar, and in turn how this will affect Bitcoin. How much is Bitcoin correlated to Fed rate hikes? Because everyone is expecting Fed rate hikes today and in the following months. And we would certainly like to know if this negatively affects the Bitcoin price and if this will lead to huge dumps, or if the bull market can continue despite the Fed raising the interest rates. So let us take a look at the Fed interest rates, historical interest rates since 1955. We see that in the 50s, 60s, 70s, the Fed interest rates were quite high. And then they gradually got lower. And then, of course, after the financial crisis 2008, what a surprise, the Fed reacted by lowering interest rates and just introducing quantitative easing, lending money is super easy now suddenly, and you get money for free. And of course, we all know what happened. It created a huge asset bubble, basically an everything bubble. Everything just pumped, because if you get free money, if suddenly lending money is basically free because there's almost no interest rate anymore, it's hovering around 0 point something, whereas before it was at 7, 6, 7, 8%, even 18% in the early 80s. So suddenly you get free money, then what happens, of course, everything just goes up suddenly, the stock market goes to infinity, housing prices, ever wondered why real estate just goes up and up and up? Well, because if you get free money and don't pay almost any interest, then the prices keep going up and up and up. So a huge bubble was created. But we, of course, would like to know, how does this affect our beloved crypto market? Because we are very worried about crypto because of the technology, not because it would make us poor. Of course not. Everybody's in here only for the technology. So it has absolutely, I swear, nothing to do with the fact that we want to earn money in this market, right? It has absolutely nothing to do with this. We are really only worried about the technology. So what does the Fed interest rate hike mean for Bitcoin? In 2015, the Fed started raising interest rates, and they went up from 0 point something, the low was at 0.07 in 2014, and then they started in 2015, and it reached a top in 2019. So let's look at what Bitcoin did, right? Bitcoin, now that is a bit problematic now. We have to do logarithmic. So here I did overlay the Bitcoin chart, the historical Bitcoin chart from 2010 onwards, right? Because Bitcoin just has been trading since 2010. And from 2010 onwards, there were almost no interest rates. Now, I'm sorry, but this scale is now worthless. Just ignore this scale. We can see that at some point when the Fed started raising the interest rates, because they were around zero for a very long time, what actually happened is that Bitcoin also started rising. What? I mean, how can this be? Look, so the Fed starts raising the interest rates, but Bitcoin starts rising simultaneously. And only then, when the rates got really, really high, did Bitcoin start dumping. So that is quite unexpected, because normally we would assume that if the Fed starts raising the interest rates, the dollar will pump like crazy, and in turn Bitcoin will dump, because we found out many times on this channel that Bitcoin is inversely correlated to the dollar. So then let's look at what the dollar is actually doing. Let's also load the dollar index here. And what can we see? This is actually quite interesting. We see that the interest rates start rising, but the dollar is not necessarily rising at the same time. In fact, the dollar started rising in 2014 before anything happened. It was only the announcement that the Fed will raise the interest rates which already made the dollar pump. But when the Fed actually started raising the interest rates, not much happened. And in fact, the dollar even dumped. The dollar didn't pump, it reached the pump before when it was announced. But when the peak was reached in 2019, the dollar was not higher than it was here. It just wobbled sideways. So basically what happens is that the pure expectation that the Fed will raise the interest rates makes the dollar pump already. Then when the interest rates actually start getting raised, the dollar doesn't do much and sometimes even dumps, as can be seen here in 2016. The blue curve is the dollar. It started even dumping, even though the interest rates were rising. So we see that this is not necessarily always super perfectly correlated, but we see that Bitcoin is anti-correlated to the dollar. That is very clearly visible. Because, for example, in this whole range here, when Bitcoin was pumping like crazy, right, the dollar was going sideways. And then as soon as the dollar started pumping, Bitcoin was going down. And then when the dollar didn't do much anymore, Bitcoin started going up. So when it went sideways, Bitcoin pumps, or when it goes down, Bitcoin also pumps. But when the dollar keeps going up, Bitcoin doesn't like it so much and doesn't pump too much. But we can see that there is no clear correlation of Bitcoin to the interest rate. So if now the Fed starts raising the interest rates, right? Start raising, because all these rate hikes are already priced into the dollar right now. So if we go to the pure dollar chart, DXY, and we keep in mind that the Fed started raising the interest rates in 2015 and they reached the peak in 2019, we see that actually the dollar didn't rise anymore, even when the interest rates were still rising. So what does this mean? So this means now we are at zero. When the Fed starts raising the interest rates now, because this is already priced in, I strongly suspect that either the dollar will go sideways, will continue wobbling around, or that it will even start dumping, that it will even go down, because 7 or up to 9 interest rate hikes have already been priced into the dollar index. So if now for some reason, for example, because of the war in Eastern Europe, suddenly the Fed says, oh no, 7 or 9 interest rate hikes this year is too aggressive, we will go down to 5, that should be enough, then what do you think will happen? The dollar will be dumped, because now 7 or 9 interest rate hikes are already priced into the dollar. So there's this expectation that this will happen. But now if the Fed suddenly says, no, we are backpedaling, then the dollar will start dumping. And what happens when the dollar starts dumping? That is right, friends. Let's compare this to our good old BTC USD. That is right, friends. Here's our orange line. That is Bitcoin. And we see that every time when the dollar brutally dumped, here, for example, Bitcoin had its peak and started brutally rising. And here, for example, the dollar started brutally dumping. And this is exactly the time when the Bitcoin started pumping. So we see this strong inverse correlation between Bitcoin and the dollar. And as I said, now currently a lot of interest rate hikes are already priced in. But we saw that historically, when the interest rates actually start rising, the dollar doesn't necessarily pump, but sometimes even goes only sideways, and in some cases even dumps. So I expect that because so many rate hikes are priced in now already into the dollar, if the Fed suddenly doesn't raise the interest rate so often, I expect the dollar to dump. And also we see a bearish divergence on the weekly chart. So here we see that the peaks here, these peaks are quite far apart. The second peak is a lot higher than the first one, but the RSI, the weekly RSI, is making lower highs. So what does that mean? Higher highs in the price, lower highs in the RSI. That's right, that's a bearish divergence. So we have a strong bearish divergence in the dollar, which means the dollar is weak. It's like, I don't actually want to rise. I want to relax, I don't want to rise. This is strenuous. Just give me one reason to drop. Just give me one reason to brutally drop. It's the dollar is waiting for a reason to drop. And if the Fed says, okay, we're raising only 5 times this year instead of 7 or 9 times, then bam, you can expect the dollar to brutally dump. And I think that this will be the catalyst for the next leg up in Bitcoin. That's why I think Bitcoin is just waiting for the next opportunity to start rising. It's just waiting, like, come on, give me one reason to rise. And we said it's in this channel here, it's doing a flat correction, a running flat correction. That's how this thing is called. And we have also this hidden bullish divergence that we mentioned a few times, where the price keeps creeping up higher. We have higher lows here. This second low, if we take a closer look here, these lows are higher than these lows, but the RSI is falling. The RSI is making lower lows. So we have a strong hidden bullish divergence. Now combine this with the weakness of the dollar, the bearish divergence of the dollar, and my strong suspicion that the Fed will not raise as aggressively as they announced, and that already many interest rate hikes are priced into the dollar. Combine all this, and what do we get? Yes, friends, we get a nice setup for a brutal pump, the main pump, the final pump, the main pump of this crypto market, which will lead us to the final top. The final top of this market will coincide, in my opinion, with the final top in the stock market. So I expect that we get the final top of the stock market and the final Bitcoin top around the end of the year at around $230,000 for Bitcoin. And for the stock market, if we load the Dow Jones Industrial Average, I always make this overlay here. This is the 1929 bubble, so I think we are here, right? This is the overlay, so this is actually where we are, and I think we will get this nice last brutal pump here towards the end of the year. Now, of course, you cannot overlay it perfectly, but if we look at the long-term chart, it fits eerily nicely, especially those two peaks here. This is the overlay with the 1929 huge stock market crash. So I expect that the top in Bitcoin this cycle will coincide with the top in the stock market, and I suspect the top in the stock market will be in fall or winter this year or early next year. And we are here probably, or here. So this is like this pre-pump button. And then I think we will just get this brutal last pump until the end of the year. And then at some point, when everybody is ultra euphoric, everybody goes berserk, then suddenly, wow. And this, I think, will be quite brutal. So I will prepare already mentally and think about some strategies. I will keep making videos and I will share my thoughts about what is going to happen and what one can do in order to prepare for this. So that's it, friends. I hope you enjoyed this video. Don't be too worried. Even if a financial crisis comes, this will not be the end of the world. 1929, the world didn't end. The 30s were also not the shittiest decades in the United States, at least. In Europe, pretty much, yeah, but in the United States, not so much. So the world continues and we will continue to live. So we just have to think about strategies, what we can do. That's it, friends. Have a nice day and see you next time.